We've got a mind-blowing development in this market literally 3 days from now on February 6th, and I want to break this down for you because the potential implications downstream of this could mean that literally in April, we're looking at a $64,000 Bitcoin. So get that lotion out, legends, because it is a very, very exciting one. Actually, this is a video that I've been hyping up for a little bit with you guys. It is to do with our golden cross. Now, for those of you who don't know what a golden cross is, let's actually talk about this real quick. A golden cross is going to be a signal that generally shows you that we're reversing in a trend, going from a downtrend upwards, and we're generally going to be using the 50-day and 200-day moving average. And as you can see from my search history, I had to double check that was correct because it's been so long since we've seen something so bullish. And here's the thing: is we saw this coming from quite a while back, and now it's right around the corner. It's getting very, very exciting. Let me actually show it to you right here. We've got 3 different moving averages on this chart right here. Number 1 right here, this white line, the 200-day moving average, so literally just the average price of the last 200 days plotted as a line. And then the yellow line is the 100-day moving average, and the purple line is the 50-day moving average. That's what we're looking at on this chart. And what we can see is we already got the 100-day moving average. I was actually going to make a video just about this, but to be honest, it's not that significant in my opinion. I mean, we kind of cross over quite easily. You can see literally 2 crossovers right here just back in like September, October. So it's not the most significant sign in my opinion, but what happens a lot less frequently is a cross between the 50 and 200 day, and that is obviously going to be a lot more exciting. Now, here's the deal, is this is about to happen. It's absolutely great that we got the 100-day and 50-day crossover, right? One of the most common things that you hear me talking about on this YouTube channel is that we're going to form our short-term reversal signs first, then our mid-term reversal signs, and then our long-term reversal signs. And the catch is that we form many, many, many short-term reversal signs before the long-term ones actually come through. And that's a really, really important one to keep in mind because it means that there's a lot of misfires, right? So that's why I said, for example, over here, we had 2 crossovers right here, didn't really mean anything. Right now, we've had another one that's good, but I don't want to put too much focus on that because the real one to pay attention to is going to be this 200-day and 50-day. And if we actually take a look at it right here on this chart, you can see very clearly that this is literally going to cross within 3 days. I mean, this indicator that I've got right here actually forecasts when that crossover is going to be coming. And if we actually just for, just I guess for a participation award, if we throw in the 100-day moving average as well, we can see what that looks like as well. Bam, right there, that crossover has already happened. I don't actually want to focus on that one, so let's go ahead and remove this. And what I really want to talk to you guys about in this video is what's happened in the past when Bitcoin managed to form these kind of crossovers. Has it been good for Bitcoin? Has it been bad? Are we looking at a fake out or a mega bull run and different things like that? And I've got a lot of very, very interesting data to show you. So if you're excited for this, do me a favor and smash up the likes as you're coming on into this YouTube video. And I very quickly want to announce with you guys that I am working with OKX. This is one of the oldest exchanges in the space. They've actually been running since 2017, which now also puts them on their 6th, I cannot count, on the 6th year. And the very cool thing about OKX, just like at Bybit that I've been talking about for many, many months now, well, years actually, but Bybit's offer for the 30K bonus that I've been talking about for many months, OKX has something similar, but it's a lot easier to get this bonus if you don't have very, very high amounts to deposit on Bybit, right? In order to qualify for that bonus on Bybit, you've got to deposit like $250,000 and trade with it. Very, very different on OKX. On OKX, you literally get up to $10,000 in an OKX mystery box just for signing up using my link in the description. And if you deposit anything above $50, you get another mystery box worth up to 10K, and you can boost that up to 30K by trading as well. It's a lot easier to get this bonus. You don't need to deposit nearly as much. You don't need to trade nearly as much to get extremely high rewards, which is very, very interesting. And like I said, this is an exchange that's been around for an extremely long time. No issues, no FUD, no bullshit, really. And I think that makes them a really, really strong option. It's always a good idea to have multiple accounts on multiple different exchanges just to ensure yourself against potential hacks and thefts or whatever, just server downtime. Anything can go wrong, and it is foolish to only have one account in one place. If you're looking for another one, then OKX is a beautiful opportunity, and you've got a great link down there to capitalize on up to 30K in rewards as well. Very much worth checking out. Let's continue on here though. What I want to show you is actually this chart right here with some of our previous 200-day and 50-day crossovers. So we're going to start with the most recent one right here. This happened when Bitcoin went down to 30K up to about 50 and then back down to about 40. We had a bullish crossover right here, and the way we have to measure this is actually draw our box from the price level that we got the crossover at. Now, that was quite easy on this occasion here, but it's less simple on an occasion like what we saw back here, although actually this one wasn't drawn completely accurately, so that's my bad. we're going to be looking at the price that the crossover actually happened at, which is up here, and then drawing it up. Doesn't really make a difference because that's going to drop this from 723% down to, I don't know, like 650 maybe. So really makes no fucking difference. But you know, that is the correct way to be looking at it. And if we look at some of the recent ones that we've had right here, it took us 59 days from the point of getting this golden cross to set our all-time high and rally up by 53%, right? So that's a really, really good gain, because that means if you bought Bitcoin here with, say, $10,000, you'd be sitting on $15,300 within just 60 days. So that is a gain that is absolutely unprecedented. Similar situation over here. Again, 700, 600, fucking 2, 3, 400, doesn't even matter. Absolutely insane gain happening within just under a year, coming off the back of this bullish golden crossover as well. The very same moving average, our purple, rising above our 200. And just to give you a little bit more background, if you're not quite understanding why this is so significant, what it means is that we've got our long-term trend, which is signified by the 200-day moving average, but we've got our comparatively shorter-term trend with the 50-day moving average. And if we do see that it crosses up, that's generally going to just indicate that we've got a real shift in momentum, right? We go back to the definition right here. It's a signal that an uptrend is strengthening, or, you know, more accurately, I would say that it's a signal that the uptrend is beginning, even because obviously you can only really get a golden cross if you've been in a downtrend already, because the 50-day moving average has to be below the 200-day moving average in order for it to go up, right? That's just basic, right? To move up, you have to first be down. Motivational speech from Sammy Loyal today, legends. And so that's what we got the second most recent time. But over here, this was actually the COVID-19 crash of 2020. We got a bullish crossover right here. And if you measure it up from our price down to the low that we set, we were looking at something around a 65% loss. And that took place within just about 1 month. So huge fail right there. You know, if you're trading based off moving average crossovers and stuff like that, what you're going to be looking at is a situation where you might be looking at buying, you might be looking at getting into the market and doing a bunch of stuff like that, but you're not going to be 100% successful if you do something like that. You might find yourself in trouble where you start getting into very bad positions, and unfortunately that's what happened right here. But it wasn't the case on this occasion, and I actually want to highlight this one later on in the video. This is a really, really important example of what I'm describing in today's video, where we managed to pull a 173%. Take a look at this crossover happens here. We measure it from the price that the crossover actually happened at, you know, where the candle was. 173% rally to the upside, and it took 66 days. This one's really important. We're going to talk about that one a little bit later. And if we go even further back, we can see some ones that are a little bit more historic. Before that one, we had a huge crossover right here. And this is actually really interesting, because if we, again, just stay focused on the 200-day moving average, you can see that this is not only an important moving average when we get these crossovers, but also when we kind of come down to this level, it can definitely act as support. And it has done so many times. It even acted as resistance over here. If you've been a long-term subscriber of this YouTube channel, you're going to know all about that, because that's actually something that I've spoken to you guys about before. You know, and so that's very, really cool. But the 2 times before that, we were looking at a 50% drop and a 73% drop, respectively. You know, and that's an example of, you know, the reason I wanted to show this to you is, as part of this YouTube channel's promise to give you very grounded, realistic analysis. Again, I say this in nearly every video these days, because it feels like people just don't fucking get the message. I mean, not necessarily you guys, but just in general in the crypto space, is that you have to poke holes in your own analysis. You have to find the weaknesses in your own analysis and not think that you're fucking God, you know, or like someone that's just, you know, been blessed from the heavens, you know, with a better mind than everybody else, because that's the kind of thinking that really gets you screwed over in these markets. And the reason that I'm specifically saying this is, if you're not able to poke those holes in your analysis, you're just going to run with this like it's, you know, yeah, like I said, like God's word, basically, and you're gonna get yourself in trouble. You're gonna make yourself lose money. You know, that's a really, really important thing, because with these golden crosses, they are very exciting. They generally are quite important, I would say, and especially in mainstream traditional finance markets, they're extremely strong signs. A little bit less so in Bitcoin, and that's important. You need to keep that in mind for the rest of this YouTube video, because what you've just seen here, if we count this up, we've got 1, 2. And on this chart, 3 failed examples. And then we've got, right here, we've got 1, 2, 3, 4 successful examples. So we're like, I don't know, at a 60% success rate, 65% success rate, something like that, with these crossovers, which is not very high. That is very important to keep in mind, because while we start getting excited about this crossover about to happen, I bet you everybody else will as well. Right? This hasn't happened yet, but you're a few days early to this. When you log on to YouTube in a few days, when you open up your app on your phone or whatever, you're going to see everybody and their nan will be talking about this. People are going to be quite excited, but you need to keep in mind that this is not an extremely reliable indicator. It's definitely good and it's definitely important, and I am definitely taking it seriously, but it is not extremely reliable. And this is really important. If you can't swallow and understand nuance like this in these financial markets with your technical analysis, with your trading, you will not last. Take your money and get out. That's my piece for today. You're not going to last if you can't balance nuanced arguments like this. Really, really important. Now, here's the thing. I don't necessarily think that the historic ones, like kind of 2017 and before, this happened in 2015, by the way, I think, or 2016. Yeah, this was 2015 and before. I don't really think that these are hugely important for the market, if for no other reason, just because we had way less volume in the market back then. It was, this was a market where, your average kind of, not literally, but your average person could kind of move the market, right? I mean, in terms of, there just wasn't that much liquidity in this market. Now, everybody's eyes are on it. It's very, very different. So, I don't know how much credit I want to give to these more historic, crossovers, because, I mean, look, this was a 5,700% increase from the crossover here. Are we going to get that now? Maybe, but probably not, right? And then a 73% drop, 49% drop. I'm not ruling any of this out, and I'm definitely not ruling the drops out. This, I think, is completely unrealistic, but these definitely still in the realm of, what's possible for Bitcoin, in my opinion. But ultimately, it's just a long time ago. It's too long ago, and so I want to focus more on what happened back here, where, yeah, we did have a failed example. And I think this is important to note as well. You can look really far back on Bitcoin, but you have to look back at it understanding the context of what the market had at that time. It was a very, very different dynamic altogether, and the market responds to things differently now as well. Really, really important, well worth keeping a note of as we continue on in this YouTube video. Now, here's the thing. This is either, in my opinion, going to kick off a massive bull rally or a massive bull trap, and because I don't think we can expect like a 5,000% pump or like a 700% pump as well, like what we saw here. I mean, 700 we could possibly pull off, but look, it's quite exorbitant, right? I mean, not saying that it can't happen, but come on, I don't want to bet on that right now. I think it's quite reasonable to look at this pump that we had right here. And if I actually draw your attention to what happened in the market back then, we can take a closer look at what was actually going on with this crossover right here. This was when Bitcoin managed to top out at 20K, drop down to 3, rally up to 14, and on that rally up to 14, we formed this crossover right here. So this crossover happened, I don't know, like roughly around here, all the way up, bam, 160, 170, doesn't really matter, because again, we're just looking at the rough values. What we saw was a really, really nice continuation after getting this confirmation. And take a look at this. Look at the difference between the 50-day and the 200-day moving average. I mean, this was a very strong comeback for the market, showing us a clear shift in momentum. And also, interestingly, when we got that bearish crossover, which happened right around on this candle, the market did eventually, with a little bit of fucking about, did eventually come down to the $3,000-$4,000 level as well. So I think that's important to keep in mind as well. So huge rally coming off here. And not as crazy as some of the other rallies that we saw, like, for example, the 700% or 5,000% rally right here. So that's what I want to focus your attention on. And, if we look at something like that and we just plot it where we are right now, basically assuming that within 3 days from now, we're going to be at the very same price level, that potentially indicates we get the same 173% gain that we could be at $64,000, $65,000 within 66 days if we do something within a similar time frame. Now, realistically, we're probably going to do something on a much larger time frame if we do anything at all. And I don't even know if this is going to be 173% rally, right? I mean, it could be much more, it could be much less, but it's interesting to kind of look at what might happen given what's happened in the past, because this is a really strong sign. Even if we pull off something like what we had on this chart, a 53% rally, that's still going to put Bitcoin in a really good place, right? If we take a look at a 50% rally from here, actually, those of you that have been paying attention, you're going to know that I've been talking about this level a lot. A 53% rally up puts us somewhere in the high $30,000 range, and I've been talking about 40K being very possible. If we pull off something like that, that I think could make a lot of sense. Either way, if we do something bullish with this, there's a lot of upside potential. And this actually lines up with a lot of the analysis that I've been giving you guys anyway, right? If I take a look at this chart and show you this gap in the price action that I've been talking about a lot on this YouTube channel. Again, those of you that are subscribed are going to know all about this. I've talked a lot to you guys about how when Bitcoin managed to rise up, it just rocketed straight up between this green line, which is at 25,000, and this yellow box, which starts at 29, 30,000. This is a nice $5,000 gap, and we just rocketed straight up. And it was the same thing to the downside. We dropped straight down and then came right back up within the very same day. And on this occasion as well, we just dropped straight down. So I am definitely expecting that if we do manage to clear that resistance at 25K, which we're very close to doing right now, we could just see a really quick rise up to 30K. And that's really important to keep in mind, because one of the things that people just don't seem to understand for some reason is Bitcoin, has a lot of ranges that don't actually have a lot of liquidity, right? I mean, Bitcoin has a lot of ranges where if you lose them or if you pump above them, it's got no resistance for a while, and this range that I've just outlined for you, kind of 25 up to 30, taking a look at these hits right here, and you could even lower this if you want to be very conservative, but I think it's totally fair to say 30. It's a great example of that. It's a really, really good example. And in fact, before this dump even happened, those of you that were on this YouTube channel, you're going to remember that I was talking to you about how, the lines looked a little bit different back then. There was actually nothing on the chart between these price levels here, between 20K all the way up to 30, which is why I was expecting a very sharp drop down. And of course, that is exactly what happened. We actually overshot it by a little bit. Again, no coincidence here. This bell is so loud. This technical analysis is pretty flawless, I would say, in terms of these liquidity gaps. And like I said, I do expect that to work in some way in reverse as well. So that is absolutely great, and definitely something that I think could make Bitcoin's rise up, if it's going to happen, potentially be a little bit easier to pull off as well. If we do take a look at these pumps a little bit closer with this 173% move, we have some similarities as well. We had a very quick rise up into an ascending channel, and we kind of consolidated, and then bam, we just blasted off from there. It's actually, there's a lot of similarities. I actually didn't include it on this chart here, but even this period right here before the quick rise up was super similar. Let's actually go back and take a look. It's quite beautiful to see how Bitcoin rhymes with its history. We had a very, very aggressive sell-off, followed by just kind of a dead period in the market at extremely depressing levels, and then we got a very, very quick rise up. Again, you take a look at this right here. The drop wasn't as severe, but we had many more drops before it. We had extremely severe drops. We fell into a very depressingly low price level, and then we got a very quick rise up, followed by trading within an ascending channel. Again, I mean, the time frames are a little bit different. On here, we're looking at the daily time frame, and it lasted quite a while. It lasted around a month. So far, this one's like, 10 days or so, maybe a little bit more. So not nearly as much, but we're looking at quite similar characteristics overall, and we're not looking for one-to-one, mirror images of what we've seen in the past either. That's not necessary. So I definitely think that we could be onto something here. I definitely think that we could be looking at a strong sign here, and that is why I'm bringing this to your attention. There's just a lot of similarities that make this quite interesting and quite appealing to trade. Again, if you are looking for a place to trade all of this on, OKX is your place to be. If you're looking to get these rewards as well, bottom line, guys, if you're interested in trading on, what has proven to be a safe exchange over the years, right? Everyone in their nan can talk about being a safe exchange, but if you don't have that track record of literally being in this space now for 6 years, it doesn't mean all that much. That's why I'm a little bit resistant to use, let alone even talk to and promote, the newer exchanges that come on the block, because they haven't had that time to prove themselves. You could have all the right intentions and then still get screwed, because this is a vicious game, right? Things just don't go your way in this game. OKX has been around for a really long time. They're giving you up to 30K in rewards, which is absolutely phenomenal. And if you want to couple that with Bybit, guys, you're getting up to 60K in rewards. And again, the cool thing with Bybit is the reward is guaranteed. If you just follow the steps, you're going to get what you see. It's just that it's harder to get them. You need to deposit more money. You need to trade as well. But you are getting up to $30,000 or much more sensible, bonuses like $5,000 here. And the very, very cool thing about Bybit is that this is money that's just credited straight into your account. Like, you can trade with it. It's like demo money. If you lose, doesn't matter. But if you make money, you can actually withdraw those gains, which is absolutely amazing. With OKX, you're looking at various different rewards that come up to 30K, but anybody can access them pretty much. I mean, you're assuming you've got $50, anyone can access up to 20k, the first 10k batches of these rewards, and then you can boost that up to 30. So very, very cool offer there. If you are interested in seeing how I'm navigating these markets, then bam, the steps are on screen right now as well. This link in the description will take you to my free Telegram channel where I'm giving you more analysis, actually from myself and my team around the clock, free of charge, pinged straight to your phone. And once you're in there, if you want to jump inside a VIP, you can click on my name at the bottom of any post and then send me a message. That's it. You're in a direct chat with me. You can ask me whatever you like, and you can get inside of my VIP group where you can watch me trading in real time, and also my 𝗓𝗪𝐺 Academy courses where I teach you everything I know about trading from A to Z, and most of you that join VIP will get that for free anyway. So there you go. Really hope you've enjoyed this one. If you have, you know what to do. Head up the likes, subscribe, click the bell, and I'll see you all in the next one. Cheers.